Hey, welcome back, everybody. I've already been live once today. This is round two. We're going to be covering the FOMC meeting live, the announcement that they're going to be making about how much we're going to see for rate cuts, because believe me, there are going to be rate cuts. The fact of the matter is, exactly how much is it going to be? Right now, prediction markets are showing approximately 100% chance of a 50 basis point rate cut. Right now, also, this and I'll the FOMC meeting is scheduled according to what I just saw online. Originally, it was scheduled for 2, and now I'm showing 2:30. Matter of fact, let me just bring that up. I had something else queued up right now, but whoops, that's what I had queued up, and we're gonna go into that in a little bit. But let me just show that to you so you can see that Fed Reserve. Here we go. And as you can see right there, Fed Reserve Live, 2:30 p.m. Eastern Time is where it's slated at this point. Yeah, I'll keep an eye on it in case it starts early, and we'll again obviously be jumping in as soon as that happens. And hey, if I got a lot of people jumping in, appreciate you being here as always. If you're new, make sure you hit that subscribe button, tick that bell icon, click the all, because I listen. The shadow banning is real here on YouTube, so I appreciate what you can put out there. If you're on X, appreciate you being here. Thank you very much. And don't forget, thumbs up. Appreciate it. Let's push that algorithm out of my way here, and let's get this information out to more people. And appreciate it if you share. Thanks. All right, so let me bring up what I was originally going to do, because while we're waiting, I want to go through a recent video from Lena Petrova. Again, link in the description. Actually, I don't know if I put that link in the description now that I think about it. So I'm going to go grab it right now, and I'm going to put it in the live chat so you have the link to the entire video. And there we go. Bam. That way you guys can go ahead and check it out at your leisure. And again, if you're in the live, if you're here live, jump into the live chat, say hey, appreciate that. And anyway, I want to go over her video. She is I'll tell you what, I love using her videos for things. She is very well versed. Obviously has a great background, former bank auditor, CPA, all this good stuff. And she takes these sometimes difficult to understand financial ideas and situations and is able to condense them down to, easy to understand chunks for the average person who obviously doesn't really pay much in the way of attention to I mean, markets, right? I mean, most people are just trying to get by, living their lives, and dealing with the inflation at the level of I got to go to the grocery store and figure out how I'm eating today. So again, I'm about to bring that up. In fact, let me bring it up here. And again, we are going to cover the FOMC meeting live, but I just as I just showed you, they are let me do that. It looks like it's been pushed off to around 2:30. So and I'll keep checking on it, and as soon as it's live, we will be there because I want to dissect exactly what Powell's going to say. And again, I see exactly if we're doing 25 basis points, 50 basis points, what. And you even had the demand letter from Senator Elizabeth Warren saying we need 75 basis points. Listen, for those people who I know watch my channel from Massachusetts, please tell me you're voting for John Deaton. Good Lord, replace Elizabeth Warren. She needs to go. She needs to go. She is no friend of the cryptocurrency space, and she is certainly no longer fighting for the little guy with regard to the banking space. Her last bill, as an example, was written by the Banking Association. So let's just jump in here real quick and see who's here. Hey, there we go. It's Crypto Candy in the house. Welcome. Appreciate seeing you here. See, saying, hey, Bedell. I don't know. I don't see Bedell here. Did I miss it? And yes, nice to be here. I appreciate you being here, Crypto Candy. I see Crypto Candy with Trade Intuition a lot. He's invited to be here for this, but he has got to prep for his own. Oh, there's Bedell. He's got to prep for his own stuff that's going on at 3 o'clock. Matter of fact, I'll put a link to his live stream once we're done here. And Jar is in the house. Welcome, Jar. Jar just got a new level of subscribers, 26K. So props to him. Link to his channel in the description, as well as Bedell, who is here. Welcome, sir. Appreciate you being here. Their channel links in the description. Go ahead, show them a little bit of love. And Jar Elizabeth is a special kind of special. Yes, she is. Yes, she is. Jar, you say that very eloquently right there. But Dell's saying he's just stopping by to smash the like and say, hey, man, I appreciate that. I know you got a busy day, work, that kind of thing. Appreciate you stopping by, and definitely appreciate you smashing that like button. Matter of fact, everybody, if you haven't already done so, make sure you hit that like button. If you're new, subscribe and tick that bell icon so you know every time I go live. I talk crypto here pretty much 5+ days a week. And when it warrants, we do some special live streams as well. All right. So like I said, we're going to bring up in the meantime Lena Petrova because I want to dissect a little bit. She's talking about our ever increasing national debt. And for those who don't watch Crypto Market Mondays on this channel, you need to tune in. Myself, Trade Intuition. We talk mostly the crypto markets, but we do look at the national debt, 35 trillion and climbing by $1 trillion every quarter. So we're going to talk about that right now. I'm not going to steal her thunder. She's much better to look at than me, and quite frankly, much more eloquent than me. So let's bring this up, and I'm going to stop it here and there to put my proverbial 2 cents in on the discussion. All right, so here we go.
Quick announcement before we begin. Apparently, I upset YouTube algorithms so much, and this is likely due to a very specific group of friendly people who just don't appreciate my message.
And I love the fact that she's talking about this here. She's talking about upsetting the YouTube algorithm, being shadow banned. She's going to talk about that. She's going to ask people to subscribe to her Rumble. And here we go. I had to do that because I'm on the receiving end of that shadow banning right now. So definitely check her out and subscribe to her on Rumble. Sorry, I just had to put that in there.
That it decided to shadow ban my content.
Big surprise.
For that reason, I ask that you take a minute now to subscribe to my channel on Rumble, as well as to support me on Substack, on Locals, and on Patreon. Your support means a lot.
Okay,
today,
so
I would like to draw your attention to a very concerning milestone that we have already crossed. By we, I'm talking about the United States. Interest payments on our national debt topped $1 trillion, while the budget deficit continues to surge. The fact that the deficit continues to grow.
Okay, so think about this for 1 second. The interest payment on the national debt, which is already $35 trillion and increasing to the tune of $1 trillion every quarter, is now we're paying $1 trillion just on the interest, which then adds to the debt, which we then have to pay another $1 trillion on the interest, which adds to the debt, and so on and so on and so on. And you got no major political candidate. I don't care which one you like. It doesn't matter. Harris ain't talking about it, and Trump barely talks about it. So, it needs to be something front and center. Again, John Deaton trying to make that front and center as he's running against Elizabeth Warren. But anyway, we're going to let Lena continue here.
Only means one thing, that interest expense will exponentially increase.
Exactly.
What can go wrong? First,
right?
We were told inflation is transitory. Then came the promises of a soft landing. You know that very well. And that lasted for several years. Yet nobody ever attempted to address the elephant in the room. The Federal Reserve, the Treasury Secretary, everyone is silent on the effects of surging national debt
Yep.
That's been driven by the out of control government spending.
Yep.
The goal here is to keep the public, you, in the dark for as long as it takes. Interest on national debt hit $1 trillion. This is an increase of 30%. Just think about that. An increase of 30% compared to last year. We've got
30% increase in our interest payments in the course of 1 year on the national debt. And everybody is just trying to kick that can down the road as quietly as possible, which is why I said Crypto Market Mondays, I'm sitting there and telling you, showing you this literal debt clock that she has up here live and comparing what the previous week was to the current week. So make sure you're joining. Okay. And just so you guys know, I did just check the help me, the FOMC, and although now it's spinning, it was not doing anything. I'm going to have to refresh the page. Hold that thought. Make sure that we're not missing anything here. Looks like no, we're still looking at yep. Oh wait, oh no, that's July. Hang on, there it is. Yep, still 230, still not going. So we're gonna start Lena back up here.
$3 trillion and counting in national debt. The bad news is that the more our government spends to pay interest on its debt, the less money there is to cover a range of other important programs,
and she
such
makes some
as
points
defense spending. Well, some may argue that it should be renamed to offense spending, such as Social Security, such as Veterans Affairs, and many other programs that millions of Americans depend on. This is precisely how this dilemma will affect an average American and has already affected.
Yes.
At this time, the federal interest expense on interest alone exceeds Medicaid, federal spending on Veterans Affairs. We love waging wars overseas, but we fail to take care of those who actually serve, apparently.
Truth.
And the interest cost exceeds federal spending on children. The worst news that...
Now, think about this. This is critical infrastructure type of things, okay? And the money's got to come from somewhere, because at the end of the day, and if you didn't watch the Matrix Money podcast yesterday, the interview that we did with Daniel Diaz from he's the executive director of Citizens for Sound Money. I'm going to actually play a clip from that in a minute. But if you didn't watch that, and you got to watch it. That's all I'm going to say. He hits so much good information. I cannot. You got to do it. You got to watch it. All right, enough. But he made some of the same points with regard to crumbling infrastructure that Lena does here.
That was the bad news. Now the worst news. The worst news is that as the wall of debt continues to grow, and by the way, the government adds about $1 trillion every 100 days to its national debt.
Like I've been saying.
So as that wall of debt continues to grow, so will the associated interest expense. In other words, there are plenty of reasons to be very concerned, because this is just the beginning. Interest costs alone are projected to rise sharply through the next decade.
Okay, I am going to go over really quickly to the Fed site, because it looks like they're playing something here. Now, I don't know what that is. It looks kind of like an infomercial, if you ask me. But hold on, we're gonna go there. Hang tight. Here we go. And did that come up? Yes, it did. Let's go and see what this is saying.
Sustainable economy. For more information on how the Fed functions, visit federalreserve.gov and click on About the Fed.
Now, like I said, so that's exactly what it was. For people who are sitting here waiting to watch it, it was literally an infomercial about the Fed. So I just wanted to let you know that I am definitely keeping an eye on that. So we're gonna go back, check out the rest of what Lena had to say here real quick, and maybe make it to Matrix Money, because again, the time on that still says 2:30, and it's about 2 o'clock now, which is probably why that infomercial is there, because originally they were saying that they were going to be live at 2 o'clock. But let me bring Lena back up here and we'll go from there. Okay, here we go.
from $1 trillion to $1.7 trillion by 2034. And at the rate that we're going, this is likely an understatement. By the end of this year, interest expense will top defense spending, Medicaid, defense discretionary spending, and premium tax credits. The Congressional Budget Office expects that interest will become the largest category in the federal budget in 2051, exceeding the amount spent on Social Security that year. The day of reckoning is indeed fast approaching. We can't argue with that.
Of course it is. And she's saying, according to their own calculations, 2051, it ain't going that far, but I'm sorry. There's no chance that it ends up kicking the can that far down the road. That's basically 26 years from now, right? 27 years from now. Say 26, because we're almost done with 2024. I mean, yeah, not going to happen. Not going to happen unless there's some major changes in the way the government spends and we do something to stop this debt spiral, like Cynthia Lummis putting in a big strategic Bitcoin reserve bill to Congress. But anyway, back to Lena.
America is also going bankrupt extremely quickly.
This is good. You need to listen to this.
And everyone seems to be sort of whistling past the graveyard on this one. The Defense Department budget is a very big budget. Okay, it's $1 trillion a year. DoD Intel, it's $1 trillion. And interest payments on the national debt just exceeded the Defense Department budget. They're over $1 trillion a year, just in interest, and rising. We're adding $1 trillion to our debt, which our kids and grandkids are going to have to pay somehow.
Amen.
Every 3 months, and then soon it's going to be every 2 months, and then every month, and then the only thing we'll be able to pay is interest.
Until we can't.
It's just like a person at scale that has racked up too much credit card debt. This does not have a good ending. And so we have to reduce the spending.
And now I don't care if you like Elon Musk, you don't like Elon Musk. He speaks truth bombs here throughout that whole clip. Okay? You can't keep doing this. You can't keep increasing the debt and increasing the interest on the debt, because at the end of the day, we don't take in that much money. It's already past what the receipts are from taxes here in the US. Hence, you got one candidate looking to tax unrealized capital gains. Holy shit. I'm trying to and keep a little bit withdrawn with regard to that. That just pisses me off, quite frankly. But anyway, we're going to listen to a little more of this, and then I am going to take you over. I just checked again. They are not live. They're not live, as you can hear the music playing in the background. That's still them on their savings screensaver. So, all right, back to Lena, and then we're going to move on.
The U.S. budget deficit surged in August. It is now getting closer to $2 trillion for the full year. The 2024 deficit saw a 24% jump year over year. The fiscal year ends in October, so we still have 2 months ahead of us, and what a 2 months it is shaping up to be. Budget deficits drive the increase in national debt. But remember that the United States government does not have to pay off its debt. Once treasuries mature, the government simply issues new debt and effectively rolls old debt into new debt, just at higher interest rates.
See, she just said
so what all
this
means is that as a U.S. taxpayer, you're effectively working to support interest payments. Your contributions are not going to be used for the benefit of sustaining infrastructure, for social programs, for lifting thousands of Americans out of poverty, or any other reason. The allocated funds for those programs in the federal budget will decline because paying creditors always comes first.
That's true.
Forget about new roads, forget about new hospitals, forget about schools. The US creditors will have to be paid no matter what. This is why it is so important to understand that this is already happening now. It is not something that we will have to deal with 10 or 20 years from now.
Exactly. We're here.
Well, the goal of my channel is to share real information, is to share.
And I'm going to just end that right there because, again, I put the link in the live chat because I forgot to put it in the description. So by all means, go ahead, follow her, do all of that, and check out the rest of her video. Again, I'm going to bring it up just to show you that they are not live yet on the Fed Reserve right here. We'll turn that to play. And as you can see, it is still just waiting. And again, scheduled according to this for 2:30. They were doing a little PSA around 2 because originally when I was looking this up and setting this live stream up, they were talking about going live at 2 p.m. Eastern time. Obviously, for whatever reason, they changed that around, and that's not what they're doing. So stick around. We're going to be doing that live. And again, I can see we got a bunch of people in here. Wrong one. Appreciate you being here, joining me live. Again, for those who are new here, this is primarily a cryptocurrency channel, but listen, cryptocurrency and the landscape for cryptocurrency is affected by broader markets. So things like the FOMC meeting, interest rates, et cetera, definitely play a role in affecting the cryptocurrency market. And so that's why for things like this, I cover things like this because most people think that because the race, say this 5 times fast. Most people think that because the rate cuts are coming, and when I say most people, I'm talking about most of the bigger influencers in the cryptocurrency space, think that with these rate cuts, it is going to take that money and flood it into Bitcoin and cryptocurrency. And now, could it? Sure. Will it be a sustained influx? I don't know. I've got some people that say no and have taken all of their money out of cryptocurrency and moved it into gold. FF, welcome. Appreciate you being here. So listen, for those who don't know, seeing that we got FF in the house, Matrix Money Podcast, I'm going to show you a clip that we did yesterday with Daniel Diaz, Executive Director of Citizens for Sound Money. And I'm bringing up the section where he talks about selling all his crypto. He's one of those guys that basically sold all his crypto. And myself, Crypto Jar, who is probably still here somewhere in the chat, and FF, we do, there he is. Speaking of Crypto Jar, there he is. We do a live stream every Tuesday. Right now, it's every Tuesday, 10 a.m. Eastern time. That's going to be changing soon to Tuesdays at 6 p.m. Eastern time. Matter of fact, I put it out in the last live stream I did earlier today, October and I'm going to go check the date again because I don't want to go messing it up and people will be like, that's not what you said. October 15th, that's a Tuesday, 6 p.m. We're going to have Hawk Crypto here live on the Matrix Money Podcast. So make sure you tune in for that. And here's FF. Yeah, I moved some of my funds to Pax Gold. Yeah, I don't. After that conversation yesterday, man, I don't blame you. I don't blame you. And yeah, F+ in the chat, everybody. If you're a fan of financial failure, F+ in the chat. Appreciate it. And yeah, C+ in the chat for Crypto Jar. And again, props to him. New highs on followers. So he's another one, puts out content all the time. If you're looking into crypto mining, crypto nodes, that kind of thing, you definitely need you definitely need to be following his channel. Again, links in the description. Yes, you are passing the grade, baby. Yeah, you got that C+. Let's see. His channel is blowing up, so make sure you go ahead and check him out. All right, let me bring this up. We'll listen to a little bit of Daniel Diaz, again, Executive Director, Citizens for Sound Money, from the Matrix Money podcast yesterday, as we're waiting for the Fed to go live. So here it is right now. And again, I have it queued up. It's still thinking. Hopefully it doesn't get all messed up right now. I've got it queued up to where he was talking about selling all of his Bitcoin and crypto. So assuming this works, we're going to listen to it. All right, here we go. Oh, boy.
I sold all my Bitcoin. I put it all in digital gold and silver. And I am out of cryptocurrency. I'm out of the stock market. All my assets, all my wealth is in gold, silver, physical, digital, and a little bit of cash to survive. That's it. I think that we are about to experience the worst economic collapse in our country's history.
Not financial.
Yeah, well, we got to put that out there. Not financial advice. Yeah.
This is my opinion.
Bitcoin. I sold all my stocks.
Hey, look, I think tomorrow, it's going to start today. We've seen it last week. We saw articles coming out. People are fearing Bitcoin goes down. Everything's going down. Stock market, it's just teetering. They're waiting for the actual report, and people are going to get scared. Look, the stock market, cryptocurrency, it is just the hopes and fears of the people who are investing, plus manipulation of the central bank by pumping currency. That's all it is. That's why the price to earnings ratios for some of the biggest companies are so out of balance.
Out of whack, yeah.
It's out of whack. You can't have a 50-to-1 earnings ratio. I mean, what? I mean, that's ridiculous. I mean, you'll never make your money back if you get a dividend from that. You know, it's all speculation. It's all this fiat currency being pumped into these tech companies.
Well,
these
those
AI
earnings
companies.
ratios also went up into triple digits at times too, right? With
Yeah,
So
exactly.
But what I'm trying to say is we lasted through that. They didn't have a massive impact, even though those companies are no longer here or they've been obliterated in some ways.
Yeah.
But for everything,
and how many times do you hear when you're talking the stock market about zombie companies and so on and so forth? That's because the Feds put so much money into this. Again, I got to be careful because already, again, the shadow banning is on with regard to my channel. Let's see. I hear this for a second time, and I'm like, man, this guy is bold. Yeah, no doubt about that. But he has a point. Yeah, I mean, listen, this guy, again, go check it out. The video is on all of our channels, actually, as well as the Matrix Money podcast channel. And listen, this guy is speaking truth bombs right here. He follows this stuff every day. He talks about sound money every day. Listen, I had to go back through and listen to this entire interview for a second time because he was putting so much information out there. I couldn't even keep up. That's all I'm saying. So FF is right about that. Hey, Andrew, welcome. Appreciate you being Andrew Alexander. That's what I get. The old man eyes. Alexander, appreciate you being here. I haven't seen you in a while. Hopefully you'll be able to join us Friday. I sent you the links to join us on Friday. And yes, he definitely is bold. No doubt about that. I'm just going to go double check again. I just did. And yep, still not live yet. According to their timeline, it looks like they're the Fed's delayed it off to another 15 minutes here. So about 2:30, they will be going live to talk about this. Listen, I'm going to play a little bit more of this because I think everyone who's sitting here waiting to talk about the Fed could benefit from some of what Daniel Diaz has to say. So, yeah, I know. Sorry. There he is. All right, here we go. I'm going to play this up.
Completely crushed. I don't know. I'm a little bit skeptical on that.
When the market, yeah.
We'll know in about 48 hours.
Yeah.
There you go. Oh boy. Now what? Oh boy.
I think I just hope you're wrong. I think that's
speaking of which, because I know why he started this kind of in the middle of the interview, but prior to that, he was thinking that Now this interview was yesterday live 10 a.m. and he was thinking that by basically within the next 48 hours, we were going to see this major crash. Now, for those who were on my live stream earlier this morning, you saw that the crypto market was already starting to retrace a little bit. The red was coming out. And so, hey, is that going to be, is he got a truth bomb coming out here about he was being smart about moving all of his crypto, selling out all of his crypto, all of his stocks, and moving it into gold certificates? I don't know. Time will tell, because we got about 24 hours left on this prediction here. But anyway, again, not financial advice. Let's put it up here for the facts of the matter. Not financial advice, not a financial advisor. I'm just some old guy on the interwebs here, who's paying attention to a thing or two, and I can talk a thing or two. But anyway, let's just put this back up. I'm gonna check again, make sure that the Fed has not gone live. So there's the shocking information I was telling you he was going to give you a little while. Yeah, I tried to warn everybody about
that. To that point, Jar, right?
Yeah.
I'm skeptical as well, but that's only because I am not a finance guy the way that Daniel is, right? Yeah. So he has the experience, he has the know-how, the knowledge.
Exactly. He's in it every day.
And the sentiment and how it affects the market, right? Yeah. So I think to his point, what you could do, and can you throw up that not financial advice?
That's still not yeah, I'll put it back up.
Is you could take half of those assets, right? Yep. Half of the stocks, half of the crypto, and just go in halfway, right? That's what I think I might do once I'm done with work. I know I'm hopping off here soon.
Hold on a second.
Wait. I don't want to be in the predicament where I put all my eggs into one basket and then you look at my name, financial failure, right? And it's free. So I'm going to go ahead and go 50 way on this, just because I'm not the expert in this space. I'm an expert in tech, but not in finance. Right?
Yeah. And don't put it in cash. Put it into put it into Pax G. Put it into Tether Gold.
There you go.
Put it in the gold. Gold is about to go.
And if we got time, I'll go a little bit more on this. And you saw in the chat that FF was saying he moved some of it into Pax, and I don't blame him. I like Paxos, by the way, Pax Gold. Let's see. Speaking of FF, he's saying, I'll give it a month before I buy back into my positions. Well, we'll see. We'll see. I mean, it could come back up quick. You never know. I mean, listen, when Bitcoin does go down, the fact of the matter is it doesn't stay down for long. Yes, when the downturns happen, they're harsh, they're fast, but it doesn't stay down. It comes right back. So I don't blame you on that. Alexander saying World Liberty Financial, Trump 2024. Yeah, man. I listened to that whole X space where they were talking about that and putting it out there, and it was a lot of good information. They were kind of all over the place because it started off with the second assassination attempt on him, and then kind of moved on from there. But it was interesting to actually listen to the whole thing. Facts of the matter are that things are going to go DeFi. That is going to be the new way, because guess what? Then you don't have to be sitting here for an FOMC meeting that still hasn't started yet to see if they're going to cut rates, because guess what? You don't need their rates. You don't need their money printing. You don't need none of that. Just saying. Jar is jumping in saying he's asking him if it's going to be a month before he goes back in. He says, I want to give it at least a couple of weeks. Alexander saying third attempt now that they found the bomb at the rally. Yeah, I heard something about that, but I didn't see confirmation of that. So I'm not that I've gone looking for it, by the way. I had too much stuff on my plate today with my earlier live stream prepping for Friday night Crypto on the Rocks. For those who don't know, because I can see I got a bunch of new people here, so let me just out my own channel here a little bit. Every Friday night, 7 p.m. Eastern time, I go live Crypto on the Rocks. Basically, what I do is I bring you on so you can come talk crypto. I tell you to bring whatever your favorite beverage is. Yes, alcohol is encouraged. And, we just sit back, talk crypto, have a laugh, and whatever else comes up, because it doesn't always necessarily stay on to crypto. But part of what I do there is show people how to dollar cost average, basically take 25 bucks every week, DCA into crypto, and change the wealth profile. $15 of that 25 every week goes into Bitcoin. And then who's ever on the stream live gets the chance to vote at what we're going to be dollar cost averaging into that week. This last half 2024 is deep in projects. And so we're more than halfway through that at this point, right? About halfway through. Holy moly, this year is flying right now. It's absolutely flying. It's crazy. FF is saying, despite your political view, an attempt on someone else's life exactly is not good. It's the sad state of affairs we are currently in, at least here in the US. Well, it ain't just in the US, truth be told, right? I mean, come on. But he is 1000% right. And that's why, or part of why, I cover that type of stuff, because yes, it affects the crypto markets, but personally, what I wouldn't care. I'm no fan of Biden, but it's not right if it were him. Definitely no fan of Harris, but it's not right if it be her. JFK. They got JFK. RFK Jr. when he was still doing his own campaign thing. It doesn't matter. Doesn't matter who you want to vote for. You shouldn't be doing shit like that here in the US. And it personally bothers me. I've said it before on those kind of streams. I didn't take time out of my life to serve this country, to see this kind of crap happen here, and or see the country going in the direction it's going. But again, that's not what this live stream is about. This live stream is about the FOMC meeting, which I'm going to check again to make sure they are not live. 1 second. Oh God, this thing always got to refresh the page. But if you want to talk more about that kind of stuff, maybe Crypto on the Rocks and or After Hours Crypto. I do After Hours Crypto exclusively on Patreon, so it's behind a paywall. No, not yet. Not live yet on the FOMC. And I do that on purpose because I'm getting enough shadow banning here on YouTube. I don't need any more. So I'm going to let this go here from the Matrix Money podcast yesterday with Daniel Diaz, Executive Director of Citizens for Sound Money. And if you're looking to get into gold, you need to check out this video and go to Citizens for Sound Money because they have a membership and you can get all kinds of access to different things gold related in that through that membership, which is as little as I think 25 bucks for the year. So yeah, that's crazy. Yes, exactly, Alexander. Exactly. Nothing shouldn't happen. Doesn't matter who your candidate is. Any candidate. And I'm not just talking, we're seeing it here in the presidential race, but I mean, wasn't it like a decade ago? It was a bunch of Republican senators or something, congressmen playing softball in DC, and somebody came out and started shooting at them. No, that kind of crap shouldn't happen. Should not happen. All right, let's go back a little with a little bit more of this.
What about crypto stables?
I mean, it's the dollar, right?
Well,
the dollar's going to crash.
Yeah.
It's inflation. Yep. I mean, you can put in a stable coin, but the real true stable coin is gold, right? Because
it goes into explaining
this
a little bit.
Inflation. I mean, here's what I usually say, and when I testify. I usually have a stack of 20s to just illustrate this. But in 1910, a $20 bill would buy you an ounce of gold. And what could those $20 buy you back then? If you wanted to, you could buy a top hat, a tuxedo, a watch, shoes, flowers, and chocolates for your date. Fast forward to today. What can $20 buy you?
Not much.
Maybe a somewhat okay meal, right? But what can an ounce of gold buy you today? Well, if I wanted to, I could buy a brand new top hat, tuxedo, shoes, pocket watch, flowers, and chocolate for my date and still have money left over.
I was going to say, and have something left over, you know.
Yeah, because gold is money and has always preserved its purchasing power. Look,
Yes.
gold just is, right? To understand the economy better, every Federal Reserve chair prior to Greenspan, after Greenspan, they went nuts with modern monetary theory, but Greenspan.
Just really quick, he's going to explain a little bit more here, and again, I am double checking on the Fed. I want to make sure they don't sneak in there on us, because it should be any minute now that they're going live. And again, I'll pull that up. We're going to listen to it together live, and we'll dissect it after the fact. But he goes into a lot of things, he just said something to the effect of, and gold's just there. But if you wait to or if you watch the live stream and more toward the end, he talks about, well, guess what? You know, these days you can actually earn some yield on your gold, and here's how. So you definitely want to check that out. Again, I'm going to let him go a little bit longer because while I'm watching for the FOMC, and as soon as the FOMC is live, I'll be swapping over.
Greenspan was the last libertarian we had, and then he got sucked in by populism. But prior to that, he was, see you, brother. Prior to that, he was trying to match, and every Volcker and all the others were trying to match the interest rate after 1971 with the price and the inflation of gold. That's why the target is 2 to 3%. Which so happens, coincidentally, it's not the reason why, but coincidentally is the inflation rate of gold.
Yeah, inflation rate of gold. Yep.
After the 2000s with the dot-com bust, they completely forgot about, and they got away from keeping up with the inflation rate of gold and silver, and they just started printing like crazy. Right? Gold does
and
nothing.
They still are.
It doesn't earn a yield. It's a rock,
and it's about to go on again.
It is the central. You do a 1 ounce ratio to any asset. So, for example, houses. Back in 1975, 4 years after we got off the gold standard, the average home in America was around $70,000.
Mm-hmm.
You could buy a home for about 265 ounces of gold. Today, the average house before the collapse, like when I was using the stats, was about 513,000. But today's price, how many ounces of gold is that? 530. 205 ounces of gold. You can do that exact same ratio with the stock market. 1 share of the Dow Jones, 1 share of the S&P 500, a share of your land, or any other asset you're trying to buy. You do a ratio of gold to that asset, and you can see the trends of when it's overbought and oversold compared to the price of gold.
Okay.
It's called wealth cycling. So when something is,
and just so you know, it's about 2:30 now, but still nothing from the Fed. So I'm going to let Daniel keep talking. This video keep going until I see them, and then, like I said, I will swap over, just so you're aware.
Overbought, like Bitcoin or the stock market, you sell that asset and go into gold. When it
okay, he's coming up to the podium now. Let me bring it up.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point.
So there you go.
This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3%.
And I know this is a little bit boring, but I want to see if there's going to be any other good information before we kind of cut away from, because sometimes these things can be long.
The median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
It's the money
like
printing
food,
that erodes
housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
How long we'll deal with the
CNBC.
questions
Thank
here,
you,
but
Mr. Chairman, for taking my questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more
the
50s
weaker
in the months ahead?
labor market.
And based on what should
Despite
we
what
make
he
that call?
said.
Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which,
and you're right,
that
FF. They just put a Band-Aid on a Band-Aid.
Payroll report numbers that we're getting may be artificially high, and will be.
We'll give it a little bit
down,
longer, and then we're going to pull from this.
We've also seen anecdotal data like the Beige Book, and so we took all of those. And
welcome automatic beats, 50 basis points. That's what they went down, 50 basis
we concluded
points.
that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the? Sorry, thank you, sir. How do we figure out in the months ahead? Is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So, a couple things. A good place to start is the SEP. But let me start with what I said, which was that we're going to be making decisions meeting by meeting, based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago, when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's
or if we're told to do so.
Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Good, Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed
automatic beats. We're going to take a look at crypto market in a minute.
Above, their estimate of long run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe
I'll be
people
interested to
the
see how
short-term
he
neutral
answers
as a little
this
bit
one,
higher?
because we already have a
Thank you.
I
shitty
think
job market.
the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, and they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today,
Which are inaccurate figures.
Is up to 4.2%. Inflation's down to a few tenths above 2. So
Still
we know that
inaccurate
it is
figures.
time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time.
So word salad to say, I can't tell you.
Individual accumulation of individual estimates of what that will be in the base case.
Howard.
All right, let's see if
Howard
this is a good
Schneider with
question, and
Reuters.
then if not, we'll go.
How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address.
I'm
the
listening
question of
because
the cut, left it open.
remember, we had
left
Elizabeth
it open
Warren
going
demanding
into
a
blackout.
75 basis
And
point
so there
cut.
was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from
multiple
June, right?
cuts, supposedly.
7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that. Now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
We're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush.
I think
to
we're
do
getting
this. We made a good
far
strong
away
start to
from
this,
where
and that's really,
I really care
frankly,
to have this
a sign
thing.
of our confidence. Confidence in
So
inflation
I think we're gonna
is coming down.
Pause that, shut it, and come here. All right. So while we look at Powell over here, let's recap. So 50 basis point rate cut. They talked multiple cuts this year and going into next year, which, I mean, none of this. Today was more, are they doing 25 day or are they doing 50? And then again, like I mentioned, you got Senator Warren sending her demanding a letter saying 75. But they could not cut. You got central banks across the globe already cutting. I talked about that in a couple of live streams, showed you the information. Some of them have cut 25 basis points, some of them 50. So the cut needed to happen is the end of the story with regard to that. Now, I for those who are paying attention, we know that the jobs market is just completely destroyed. We know they just took back over 700,000 jobs in the report from July that didn't exist. They overreported by over 700,000 jobs. And previous to that, they reported job gains, but those job gains were part-time job gains, not full-time job gains. There was actually a loss of full-time employment. So I get it. You got the dual mandate, as he keeps saying here, with regard to these rate cuts, but he's acting as though we have a strong job market. And that is simply not true. That is completely untrue when you see the adjusted numbers that come out after the fact. Oh, okay. Those guys are going back and forth. I'm thinking. But yeah, anyway, so again, there are going to be more rate cuts. That's for sure. The jobs market is going to continue, say this 5 times fast, to be weak. There's no doubt about that either. And, he's talking about hitting the 2% inflation rate goal. You're never going to do it. You ain't never doing it. And not to mention that rate is inaccurate. I mean, I think it just went to, what was it? 2.9 or something, whatever this last one they said it was. They keep changing how they literally talk about that target, how they calculate that interest rate. So I'm sorry. Again, I follow this because I know it will affect the cryptocurrency market. It will affect the markets as a whole. And I think it's important for those especially in the cryptocurrency space, who are sitting here, again, mindset is mindset. If you're thinking long-term mindset and you're dollar cost averaging into cryptocurrency and you're just sticking it in cold storage and letting it be, perfect. Winner, chicken dinner. It doesn't matter about this stuff, because when crap hits the fan, crap hits the fan. And then as far as, okay, how can crypto help me? Because it's not just about right now, unless you're sitting here trading it actively. And you got to think about, okay, it's meant to make you a sovereign individual, to make you autonomous and be able to live and survive as you need to. You can already do that. I have an entire series talking about how to live on crypto today. Started with an interview with Joel Valenzuela. A guy's been doing it already for a decade, and then went into other videos, and I'm adding to that playlist all the time. Link to that is in the description of this live stream. If you are into cryptocurrency and you have not already started to learn how you can live on crypto, you really need to follow that, and you really need to go check that out, because at the end of the day, you need to know how to use it before you need to use it. It's that simple. All right, let's go take a look at the crypto markets and see what is going on. And I will bring it up, and then I'll refresh the page here real quick to see what the latest numbers are. Okay. Now, when I first, right before Powell started talking, let me do this. Hold on a second. There we go. Right before he started talking, Bitcoin was above 61K. Right now, it's back down into the 60K range. And so that's up from this morning. If you were with me on my live stream this morning, you know that Bitcoin was kind of hovering in that 58K range. So we're up a little bit. So definitely some positive movements so far with regard to this announcement, or anticipation of this announcement. Some might argue that, hey, these numbers are already baked in here. So, and I agree with that to some degree. Same with Ethereum. Ethereum's up, was like in the 2200 range. It's up about $100 here. What else? Looks like everything is gotten a little bit greener here. For the most part, I'm just kind of scrolling through here. Yep. Either stayed the same or pretty much moving up a little bit. Not much move. So bringing it back to, we'll just bring Bitcoin up on the screen right now. Bringing it back to Bitcoin, and we'll do the 7-day here on the chart just to kind of lay it in. So 60,007. So there you go. The market's responding slightly positively, but again, as I said right here, you can see just yesterday they were up over 61. So definitely not sure if this is going to be a long-term gig. Again, if you were watching what I just put out, the portion I just put out of the Matrix Money podcast from yesterday, you saw that our talk with Daniel Diaz, the executive director of Sound Money, he sold it all, thinking, this shit's gonna come crumbling down, and his idea was within the next 48 hours. So we'll see. Somebody poke it. It's like the meme, right? Do something. That's funny. I love it, Automatic Beats. Thank you, sir. All right, but well, that's where we are. So so let's recap for those who might have missed it, came in late, whatever. Hold on, let's do that. So let me bring my notes up so I don't forget anything. We got a 50 basis point rate cut just now, Powell announced. He's talking and they're planning multiple cuts. So more for this year and into next year. So some of the numbers and projections he was going is going to be at least another percent to 1.5% lower than where we currently stand on interest rates. Let's see. Again, trying to achieve the 2% goal, which is a lie at this point anyway. And he claimed, a strong jobs market. But for those of us who actually pay attention, we know that that's not the case. And the adjusted numbers from the jobs report have shown that, they've adjusted the jobs down in this last adjustment to the tune of over 700,000 jobs. That's not nothing. That is not a strong jobs market. So I guess we're going to play it out. We're going to see how it goes. And I appreciate everybody joining me here to watch the FOMC meeting live. If you give me one moment, I want to bring up, hold on one second, the link for Trade Intuition. He didn't join me for this meeting today, for this live stream today, because he's planning on going live quite soon, actually. Really, he's got no link out there? Oh, you're killing me. You're killing me, Smalls. Let me see if I can't go to his channel directly. Usually it pops right up for me, and see if he's got a link there. So you guys can go ahead and check it out. He goes live every day at 3 p.m. Matter of fact, let me put that up on the screen right here. He goes live every day, 3 p.m., talking about trading, giving you advice. You just can't. See, he doesn't have anything set here. So I can't put out what I don't have. But go check his channel out. Link in the description, and see if he is going to be live. Again, the man's live every day, 3 p.m., giving you free info. Chris Hanley, just making it, but I'm just wrapping up. Appreciate you being here, man. Appreciate it. So yeah, that's it for me today. Thank you for joining me live to watch the FOMC. I've done you the recap. I gave you a little bit of the Matrix Money podcast. Don't forget this coming Tuesday, Matrix Money podcast, 10 a.m. But before that, Friday night, 7 p.m., Crypto on the Rocks. Make sure you're joining me. Appreciate it. Come join me live. Bring your favorite beverage, and we'll talk crypto. All right. I am going to wrap this up. Appreciate everybody being here. Thanks for, sorry, Chris. Thanks everybody for joining me for the 2 live streams I've gotten taken care of today. So I appreciate it. I hope everybody has a great rest of your day, and I'll see you Friday night, 7 p.m. Crypto on the Rocks. See you then.